BlackRock is special. They're the biggest asset manager. Larry Fink is very integrated. A lot of people go in and out of the Treasury and the SEC who work at BlackRock. One guy from BlackRock used to work at the SEC, who was at the SEC meetings on behalf of BlackRock. There's a revolving door, and they're one of those firms. BlackRock was also illogical. Like, we weren't watching for them. Up at this point, the filers had been mid-tier companies. And BlackRock, this was against type. And so it was the against type nature of their size that we thought, what do they know? Why are they confident? There's only room for one liquidity king. It's just the way it goes. There's going to be one ETF that just gets most of the organic volume. And once that one is sort of known as the one, more institutions and bigger investors will use it, and it'll just grow. It's like a snowball rolling downhill, and they all want to be that one.
Today we are joined by Eric Balchunas, who shares his upcoming prediction for Bitcoin and why BlackRock has less than 48 hours before the approval of their Bitcoin ETF. He explains why he's bullish in 2024, and with the upcoming Bitcoin halving event set for April, the crypto market is expecting a massive surge in a matter of days. The anticipation surrounding the impending approval of a Bitcoin spot ETF by the US Securities and Exchange Commission is the biggest event for crypto in recent history. The SEC is actively reviewing multiple applications for this ETF, and BlackRock's significant influence is expected to play a crucial role in 2024. There is an increasingly strong belief that we will witness the approval of at least one Bitcoin spot ETF, with the others sure to follow directly after. This milestone is eagerly awaited by the Bitcoin community, and the approval of such an ETF would carry profound implications for the world of cryptocurrency, serving as a gateway to substantial institutional investments. Balchunas envisions that this development will pave the way for large corporations to incorporate cryptocurrencies into their balance sheets. Let's get right into the latest interview with Eric Balchunas, as he dives into why Bitcoin is poised to revolutionize cryptocurrency heading into 2024. Also, we have just partnered with our friends over at Jamie Tree Finance, who have just launched a daily 5-minute crypto newsletter. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join 40,000 others in becoming a better crypto investor right now.
There can only be one volume beast. That one is set for life. It has immunity from the Vanguard effect. It never has to lower its fees, ever. Because when you're that liquid, people don't really care what you charge because they're going in and out. So GLD to this day is still 40 basis points. That's what it was day one. So you have pricing power, and that is beautiful. GLD is still the third or fourth highest revenue generating ETF. Still, even with many cheap ones in the market. That said, if you look at gold, there is a middle class. There's a 8 or 9 with over 100 million to, 20 billion. I think IAU is probably 20 billion. And then there's even some that are like 50 to 100. But then there are a couple that have launched over the years. They're like just total losers and then they liquidate. So I'd look for one liquidity king, one respectable big one that may be on the cheaper side that advisors like who don't care about liquidity. And then like a bunch of middle class that use their own networks. Like, even if you aren't the one, you still have your own clients who you know and love, and they'll buy your stuff, and you can get a couple 100 million that way. So, and that's all you need to make a living. So if you get over 100 million, you're profitable pretty much. In this case, it could even be lower, maybe 70 million. So once you see that, they're going to hang around. There will be probably one or two sad cases that they just can't get anything going, and they'll probably liquidate within a year or two. I mean, this is part of why BlackRock got involved, I think. We were always like, what do they know? But then it was like, why do they care? We found that in the annual report, Larry Fink talked about these new areas of growth, and an ETF, if you're the one, you're looking at a top 5 or 10 revenue generating ETF, depending where BlackRock prices it. But let's say BlackRock is modest at 40 basis points like GLD. I mean, this could be a revenue generator for a long time. And remember, ESG did not work out for them. This was one of their big initiatives. It's kind of, I can't say it totally is extinct or anything, but it was a flop. had a good 2 years, then energy stocks went up and like made everybody realize that ESG is active and you can actually underperform. And so even BlackRock pulled out of their own ESG fund. So I think BlackRock is a company that's publicly traded, so they have a ticker, and they have to keep up revenue because they've got shareholders who are different than their investors. Those shareholders want revenue. So they've got to find new ways to generate revenue because selling broad-based ETFs and competing with Vanguard doesn't make much money. Like I said, Vanguard has priced almost everything down to zero. And Bitcoin is what we call a VFZ, a Vanguard-free zone. Vanguard is not going to get in here, at least for the next 5 or 10 years. This is not their thing. They don't do commodities really. And it's just not Vanguardian to do this. So you're going to be able to keep prices up a little better than if Vanguard were involved. So for BlackRock, in terms of their interest in Bitcoin as a whole, I don't know exactly how truly they believe it. Probably they do. But there's definitely a business reason for them to do it. And I think that's, at the end of the day, as we look back, that's probably what sparked their filing, to be honest with you. They probably also saw the Grayscale case and said, let's throw this out there like a call option. If Grayscale wins, they might have to approve and we'll be right there. So that in the end, we actually got into theories where Larry Fink was going to withhold giving Democrats money if they didn't approve it, and that's all not true. But because we were theorizing, why would they do this? So we went down a bunch of different tinfoil hat rabbit holes on this. But in the end, I think the real motive was just, look, we're publicly traded. Vanguard, we keep fighting with. Our beta ETFs don't make a lot of money. We need to keep finding new ways to grow our business. Yeah. And this looks like a growth area. And I think they see it in their eyes as a win-win. They can make revenue while at the same time making it cheaper for the actual end investor.
With unwavering optimism for the crypto market, Balchunas boldly foresees imminent explosive growth, highlighting the active involvement of industry giants like BlackRock. Emphasizing a long-anticipated surge, Balchunas expects a significant upswing in the lead-up to the highly anticipated 2024 halving event for Bitcoin.
They will disintermediate the exchanges to a degree. The ETF will trade at 1 basis point spread. I mean, that's really cheap to trade. It's just not that much, especially per day, to pay for them to do all that whole, the custody and all the work around storing Bitcoin. So I think they see that as a win-win from their eyes. The real big one was Grayscale. I got to give them credit. So for us, I think we went from 50 to 75 or 90 after. I think Grayscale got us to 90. That was the big one. Them winning that court case. Those are the two major catalysts. But then the other one was after Grayscale won the case, and right around the Ether futures launching, we heard back channel that the SEC had actually started reaching out to go over the S1s for the spot ETFs and giving them comments. I think that's when we went from 75 to 90. That's when we were like, okay, this breaks the pattern of radio silence, delay, denial, which we've seen every cycle for 3 cycles for a decade.
Yep.
Them talking was huge. And obviously that proved to be one of the best bellwethers that approval was going to happen, because why bother? Why not just be radio silence, write up your new reason for denial, and then drop it like a bomb on January 10th? If BlackRock could get anything they want from the government, in-kind creations and redemptions would be a thing, because they wanted that bad and they didn't get it. So this idea that Larry can just make a call is a little defeated by this. That said, BlackRock coming in was an event that just got everybody going again, and all these filings came in. A lot of the asset management industry thought that ETFs would just sort of come and go. It was like, oh, this will be some kind of passing fad. It wasn't until the last 5 years when the flows got big. Like in 2021, ETFs took in almost $1 trillion. And even in 2022, when the market was down, they still took in $600 billion. These are monster feats for a new vehicle. And so now, because the whole world is like ETFs of the future, it's become a bigger deal than GLD, in my opinion, even though there's a lot of parallels. So it's also a one-of-one situation. Never before it's taken, SPY took 4 years to get through the SEC. That's the first ETF. This is double that plus some. So it's never been this long. It's never involved such high rungs of government and Wall Street. It's never been a case where many will launch on the same day that do the same thing. We've never seen that. So if you're an ETF nerd, we're going to find out so many things. There's so many subplots. It's just like a fascinating experiment on many levels. But the big thing is ETFs don't really bridge a new asset class once a decade. When the first bond ETF launched, big deal. Obviously, SPY was. For GLD, I'm trying to think of another one. That's really it. Those are, quote, asset classes. So this is, again, once a decade kind of thing. So that's why we're going so nuts with it, with the coverage, even though at the end of the day, this might take up 1-2% of market share. But it's taking up half of our brain power right now because it is such a big story and such a unique occurrence.
As we stand on the precipice of January of 2024, the crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Balchunas' outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Eric Balchunas' prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.